revolution will be live.
Hello, people, and how are you all doing? Hope you're all good. This is we can call it a part 2 of our gold analysis, but I'm going to be focusing more on the news instead of the charts today. So let's get right on ahead. Excuse me. So this is what we last looked at the previous video. To look at the gold, to see where the buyer zone is, what was happening within the gold. Please refer back to the last video. I was looking at the macro section of gold, so just be careful of that one. It's not the macro. But today we're going to look a bit at the micro, and that's obviously intraday swing trading. Not looking at gold as investment, but looking at gold as potential trading opportunities. So this is what we'll talk about last time. So now let's just go into the news, and then we'll go back into the charts and see what's going on. So here, this is from 16th of August, last week sometime, and they're basically telling you that what the recap of the gold is, what's going on in gold. But that's the thing I was saying here, that whatever they do tell you is that you should be careful, because these people talk a different language. Sounds like English, but it's literally a different language. Some words might mean something totally different to what you're used to, or they just use different words, like I said before. So obviously you can see certain keywords: repeatedly escalating trade war, G20 summit and all that. So, and this is what they're mostly worried about, is the inversion of the US yield curve. Recession. Listen, people, there's not a recession coming until 2021 or something like that, because the last recession should have happened a few years ago. But obviously that recession hasn't happened yet, and these people can keep on going till kingdom come, until we get $1 million note. It's happened in other countries before, because they can do it, since they can print money out of nothing. So then here it says, what we'll say is that the gold market has been remarkable, unbothered by it, while the equity market spasmed on when the yield curve inverted on Wednesday afternoon, and yield on the 30-year bonds yield collapsed to a never seen before sub -2%. Gold markets didn't move more than a few dollars up or down in an environment where I would have predicted a rip higher for the yellow metal. So obviously what this guy is saying is that, okay, the yield curve, 30-year bonds collapsed -2%. My God. So that means that it's expensive for people to invest in the dollar, because their yields they'll basically be paying for the yields instead of receiving yields. So then that means that when that always happens, well, not always, but usually happens, is when people move from actual cash and fiat money into tangible assets like gold. So they'll move on to gold as a store of value, because obviously the value of the fiat currency is going low. But you didn't see that happening. I wonder why. So he carries on going, saying, so what does that mean? One of two things, as best as I can tell. The gold market, to whatever degree, it has a collective mind of its own. Doesn't buy that. This instance of inversion is the doom signal that the economy has feared. Doom signal. Give me a break. Or else there is some serious price fatigue in gold after 6 consecutive weeks in the green. Either way, I'm not ready to call a top on gold trend just yet. This week does have me starting to look for hints of one. So this guy's kind of right and wrong at the same time. He's basically looking for a top here, okay? Because he says, I'm not looking for a top just yet. He's gonna wait. That's why he's basically saying. Then this is what people are reading. So people are getting ready to sell when they should be getting ready to buy. because obviously the reason for why it says he doesn't see a top here, he probably believes that this is the top here, right here around the 1700 area, but gold has still got a far way to go. Or maybe he might think this is a top here, 1620. So when they use language like that, you could have said, yeah, I'm waiting for a bottom to go along, but obviously his focus is to go short on gold because he's seeing, oh yeah, the yield is -2, so if the yield increases, then gold is going to decrease. No, it's not gonna. That's not gonna happen. Okay, and let's go on to the next one now. It is spot gold recovers 1500 on expectations of central bank support. So literally a week later, not even a week later, like 4 days after that little article came out, they're saying, oh yeah, gold's going back up. Alright? So obviously you can see here the prolonged US-China trade dispute and all the other things that are also involved. Because mainly this gold is US-China, the trade dispute. That is what is pushing the gold higher. When people thinking that, oh, it's going to go lower for some weird reason, but it's actually not. This is a good article to read as well. And then here's a shocking surprise. I know I did say China is the biggest. China are still the biggest buyer of gold, but Russia, yeah. Oh no, the Russian conspiracy. Don't worry, I'm not going to be doing any Russian conspiracies. May I just follow the facts and numbers, okay? Russia turns out to be like that they're trying to build their own monetary system. However, I am a big skeptic over that. I don't believe that Russia is going to try and build their own monetary system. I think they just want to sit at the table. They have got a seat. It's weird. Russia technically don't have a seat at the table because China is above Russia, right? In all things. So this purchasing of materials of Russia is very confusing to the masses because even look at this article, conspiracy theories, people try and say, yeah, Russia trying to kick out the Rothschild banks. No, they're not. Rothschild banks is there, cemented. They will always have a central bank. So what's going to happen now is, here it says that they bought 2,200 tons of gold worth about 100 billion. That is not really that much because you have to consider that in India, women have 11% of the gold. It's weird, yeah, as jewelry and everything like that. So then now what's going on here is they're trying to tell you that people are buying gold in Russia, or like the Russian government's buying gold, and China is having troubles buying gold. But then they have been buying gold for over a decade, like a lot of tons, over 2,000 tons a year. I think China's been buying. So then that means that if that's happening, and we all know that gold is a store of value, what will actually happen? Okay, that's where you refer back to the charts because you first have to see the game plan and the chess being played. Alright, here is another article from the 13th of August saying Russia has become the fourth biggest reserve holder of gold. Astronomical. One article says they're the best, no, not the best, they're the first. One article says fourth, whatever. Now, we're at the Fed. A lot of people think that the Fed owns gold. This is the Federal Reserve own website. The Federal Reserve does not own gold. They just give you certificates, which you can't redeem into gold. You can only redeem them into dollars, which is weird. Okay, so that is why. Look at this. The remaining 95% of U.S. Treasury gold, 10.4 billion book value, is held custody for the Treasury at the U.S. Mint. Do you really believe that? Because what's happening is other countries are demanding for the gold back. Because what happened is, in order for the US dollar to become a reserve currency, countries gave in their gold in exchange for that paper. So then now they're asking for the gold back, which I don't think the US actually has, because they created the fiat system. How you can come with a grand to the bank and then they can times it by 10, so they can loan out 100,000. Every time that you go into a bank, they don't actually have physical money there. They just literally type in money on the keyboard. And that's how it actually comes into creation. So it's not like they've got a vault and then they put the money into your account. No, they literally type it on the keyboard. That's how money is made. And then it transacts back to the Central Bank of England, as I'm in the UK right now. So this is how it actually kind of looks like. So then let's go look at the lower time frames. On the lower time frames, as you can see here, it did have a push up. So then let me just type in on Google here gold price. Uh, okay, so what the news is saying here, tightening up. Now let's go here, FX Street, very popular site that everyone uses. We climbed the touch on Tuesday with spot rising, blah blah blah. This is all nonsense, basically, because gold price has moved into a white base symmetrical triangle, which could break either way. Okay, let's see if that's actually happening. This is happening here, right here. So they're saying that gold is moving to a triangle. Yeah, as you can see here. And they're telling us that prices could break either way. Yeah, it is true. The short term trade. But then here's what's gonna happen. Okay, because I understand how these people move. This is what we call a triangle. Any traders know this. So then what people are thinking that, okay, this is how this is the only job I know. These people can be right and wrong at the same time. Doesn't matter. Oh yeah, break one way, it can break the other way. That's what they're saying. This here is what they're saying. This is what people pay them for. What kind of nonsense is this? Now let me tell you the way that gold's gonna go. Okay. So what's happening right now is there's a support right there for gold. Okay. And there we go. So here's how people are seeing it. People are seeing this as a very strong support because there's void right under here. So what's there right now? I want the US dollar. Yeah. Let's see. So there's a lot of people buying gold right here, right now. There's a lot of people buying gold right here, right now. And then obviously like the short-term traders, probably got the stops around there. So the red line is indicating a stop loss, probably around there, because they know, oh, once it goes here, then I'm going to start selling. Okay, here's what's going to happen with gold. With gold, I can see it going down here, right? Retesting that support, then going back down. But then what will happen will be another rally. Because this is where it's literally going. But then first, like I always say, these people need orders to come into the market so then they can fulfill their own orders. So if I'm a big hedge fund with 40 billion, I can't just say, okay, I'm going to buy gold, because then that's going to just ruin the market. I have to have orders going the opposite way. Or if I've got 40 billion, I can't transact all that 40 billion. I might be able to get off 10 billion, but the rest of the 30, because there's no orders coming in, I can't do it. So then I might end up in a loss or in a very low profit. So what I need to do is I need to entice everyone else to make sure that, okay, then I need some orders going the opposite way so I can fulfill my orders. So then if I want gold to go higher, I'm going to entice people to sell their gold. And then by doing that, I'm going to be using market structures. This is if I'm a hedge fund and I've got billions of dollars. I'm going to use market structures and I'm going to use sentiment. Best thing to do. Okay? Because fundamentals, they might go. But when you got sentiment, when someone says something, people tend to listen for some reason. Right? So this is what I'll do if I was a bank. I'll be moving the price gradually down, then I'll be doing retests. Okay, so I'll probably likely do a retest of the support, might move down again, and then I'll shoot back up. This is what I'm thinking gold will do in the short-term version. But like not shoot back up into astronomical figures, so probably around here, and then it might come down back into the buy zone down there. So let's get out and then see how small this move is. So all that move right there happened here. Okay, right there. So this is the short term and this is the long term. You see how they try and confuse people now. So like in the short term, they'll say, yeah, gold's going down, down, down. It does go down eventually, but like, look how much it will go down. Most likely around this area, and then go back up and then come back down. See? So then if I go back on this one, this is nothing compared to the bigger picture. This is the ultimate buy zone around this area. It might be just above here. This is the ultimate buy zone. So when you're looking at gold, you just have to look at different things, you know. I know this video is a bit all over the place, but I'm just looking at different types of news which is out there, which you can follow as well. You can look into yourself what to actually look at. Look at the language that they use. Look at the actual time frames they're using, you know, because these are people get tricked a lot. And always know that for, you know, for every force there's like an immovable object or something like that, some physics nonsense. There's always someone going to be on the other end, alright? So you've got two choices: play against the banks or play with the banks. I choose to play with the banks. So this is where kind of the gold news is. Oh, let's actually take a look and see if there's anything to do with the ports. Okay, nah, nothing really with the reports. I'll do the reports on the next video. Probably broken down and everything on what to actually look at, like what numbers to actually look at. But for example, like, let's take a look at the Nasdaq. All right, look, yeah, this is the Nasdaq here. The shorts minus 13,000. Yeah, look at this. Okay, so they're releasing the shorts and then gaining on the longs. But even though the longs have released a little bit as well, but that's why it looks like to me. Okay, so when you look at this stuff, you just look at what the big boys are doing long term. Because short term will be, it's kind of really difficult because you get fluctuations, price ranges, and you know, you have to be a real animal to trade day trading. The specific things that you can follow. So this is what I think of the smaller time frame, what these guys are trying to say. This is how it's gonna go down. And in the bigger picture, this is what I see going down the bigger picture. Yeah. So yeah, so if you do have any analysis you want me to look over and anything else, please do feel free. I'll be probably doing like daily videos and whatever information is out there and what I'm looking to invest in stocks. If you get woke, you go broke, things like that I'll be talking about. So stay tuned, please subscribe. Thank you very much and have a good day. Stay in profit.
The revolution will be live.